tax. Students, tax means part or portion. Tax means part or portion. So tax is basically part of our income, portion of our income, which we will contribute towards the state against the facilities which we are receiving from the state. For example, every state is responsible for providing health and safety services. Every state is responsible for providing infrastructure facilities. Every state is responsible for providing security services. So there are few basic necessities which is responsibility of the state, and we are paying to state against those facilities. That is called tax. Okay, so part of our income which we will contribute towards the state against the facilities which we are receiving from the state is called tax. There are two very basic types of the tax. One is called direct tax. Direct tax means the tax which we will pay directly to the tax authorities is called direct tax. Tax paid to tax authorities directly is called direct tax. For example, income tax. As the name explained by itself, income tax means tax paid by an individual on his income is called income tax. So everyone will calculate the income tax and directly pay it to tax authorities. So that's why it is called direct tax. Number two, capital gains tax. Students, capital gain means profit on sale of non-current assets. There is a separate tax on profit on sale of non-current assets, that is called capital gains tax. Whenever we will dispose of a non-current asset and we will have profit, we will pay tax on that profit. That tax is called capital gains tax. Once again, we will pay this tax directly to the tax authorities. It is called direct tax. Third one, inheritance tax. Once again, as the name explained by itself, when we will inherit few assets from our family members, in that case, we will pay a tax that is called inheritance tax. Corporation tax. Companies will calculate their own profits and the company will pay a tax on the profits called corporation tax. So these are four types of direct tax in our syllabus. And one type of indirect tax which we will cover in our syllabus, that is value added tax, VAT. So VAT is basically indirect tax. Major portion of the VAT is paid through an intermediary. For example, we are basically the end consumer. We will not pay VAT directly to the tax authorities. So we will pay VAT to the shopkeeper and shopkeeper is responsible for paying it to tax authorities. So VAT is basically paid to tax authorities indirectly. So these are basically total 5 types of taxes which we will cover in our syllabus. These are 5 areas which we will cover in our syllabus: income tax, capital gains tax, inheritance tax, corporation tax, and value added tax. These are 5 core areas. These are 5 key areas which we will cover in our syllabus. Students, first of all, the order will be, first of all, we will cover CGT, capital gains tax. Then we will cover IHT, inheritance tax. Then we will cover value added tax. Then we will cover income tax. And finally, we will cover corporation tax. So in this order, in this sequence, we will cover our syllabus. So first of all, capital gains tax. Today we are going to start capital gains tax. That is basically the first important and core area, key area of our syllabus. Capital gains tax. Students, the very first point is tax year. Capital gain tax is calculated for the tax year, and in the UK tax year runs from 6th April to 5th April. In the UK tax year will be from 6th April to 5th of April. So it means our currently examinable tax year is from 6th of April 2022 to 5th of April 2023. So this will be our examinable tax year. So we will check the number of assets which we have sold during this tax year. We will calculate their profit and losses and we will pay tax on it. That is called capital gains tax. So capital gain tax will be calculated for the tax year. Now, there are few terms which we should remember. Capital gain tax will arise when a chargeable person makes a disposal of chargeable assets. When a chargeable person makes a disposal of chargeable assets and realized chargeable gain. When a chargeable person makes a disposal of chargeable assets and he has capital gain, means he has profit on sale of that asset. On this profit, he will pay a tax called capital gains tax. We will discuss all these terms in detail. When a chargeable person makes a disposal means he will transfer an asset, he will dispose of an asset, he will sell an asset. An asset should be a chargeable asset, and he has capital gain, means he has realized profit. So in that case, on that profit, he will pay a tax called capital gains tax. Starting with the very first term, which is chargeable person. Chargeable person. Chargeable person could be UK resident or non-UK resident. Okay, it will be mentioned in your exam either the chargeable person is UK resident or not. If question is silent, you will assume that this individual is UK resident. Okay, if a person is UK resident, this individual will pay UK CGT on sale of UK assets and overseas assets. If an individual is UK resident, that individual will pay capital gain tax in the UK on sale of UK as well as overseas assets. But if an individual is non-UK resident, he will not pay CGT in UK on both UK and overseas assets. So a non-UK resident individual will not pay any CGT in the UK. His UK assets will be exempt and his overseas assets will be exempt as well. But there is an exception over here. Exception is UK property. If non-UK resident individual has a property in the UK, only that property will be chargeable. Other than the property, all the assets will be exempt. All UK assets will be exempt, or as well as all the overseas assets will be exempt. So this was discussion about chargeable person. So as a conclusion, if an individual is UK resident, both his UK and overseas assets are chargeable. If an individual is non-UK resident, both his UK and overseas assets are exempt except UK property. So this is basically the first term that is called chargeable person. Then second term is chargeable asset. Now, the next term is chargeable asset. Students, tax law has provided a list of exempt assets. We need to memorize the list of exempt assets. So all assets except exempt assets are called chargeable assets. So chargeable assets are basically all the assets except those which are exempt. I have mentioned a list of exempt assets. For example, motor cars. Motor cars are totally exempt in the capital gains tax, but please remember, motor car means only cars. Heavy commercial vehicles, trucks, buses, those are not exempt. Only motor cars are exempt. National Saving and Investment Certificates. This is basically an investment document, just like loan notes, debentures. So it is totally exempt if you will receive any interest on these certificates. All the current assets are totally exempt. Cash, debtors, inventory. So these are basically current assets. All the current assets are totally exempt. Decorations awarded for bravery, for example, any kind of medal, it is totally exempt. Damages for personal injury from the insurance company are totally exempt. Endowment policy proceeds. This is basically a policy for the employees. Detail is not required over here. So if in your exams it is mentioned that you have received any receipt from endowment policy, it is totally exempt. Foreign currency. If you are holding any foreign currency for your personal use, it is totally exempt. Work of art for national use, for example, if you have prepared a portrait of national heroes, something like that, so it is totally exempt. Jilted securities. So once again, this is basically a document just like loan notes, debentures, totally exempt. Qualifying corporate bonds, totally exempt. Loan notes are totally exempt. Some chattels. Chattel is basically a detailed topic. We will cover it later on. Okay, so we will cover this topic later on in this chapter. Investment in an IS. ISA stand for Individual Saving Account. This is basically a special type of bank account. If you have deposited your money into this bank account, any return received will be tax free. Prize and betting winning. Betting is allowed, and if you will win a bet, in that case, it will be totally tax free. Students, you have to memorize the list of these exempt assets. So all the assets except those which are mentioned in this list are totally exempt. Okay. So for example, chargeable assets could be land and building is chargeable asset, goodwill is chargeable asset, lease are short-term, long-term are chargeable assets, unquoted and quoted shares are chargeable asset, unit trust, chattels. So please remember, chattels are written in both chargeable and exempt assets. Okay, so some chattels are chargeable and some chattels are exempt, but we will cover this topic in detail later on in this chapter. So this was a discussion regarding chargeable asset. Third term is basically disposal. Students, disposal means transfer of asset. Disposal means transfer of asset. Examples could be number one, sale, very common example. When we will dispose of an asset, when we will sell an asset, it will be transferred. Number two, gift. If you will gift an asset, once again, the ownership of the asset has transferred. So it will be considered as disposal, but we will learn in a while how to calculate profit in that case. So that is basically part of our next topics. Theft. If an asset got stolen, in that case, once again, the asset has transferred. So it is also an example of disposal. But once again, how to calculate gain or loss in this case? There are special rules. Destroy. If asset had destroyed, maybe through fire or maybe some unforeseen event, for example, maybe earthquake. So in that case, once again, asset has transferred. We are not owning owning this asset anymore. Damage. So these are basically few examples of transfer of an asset. In all these cases, the asset has transferred. But we will discuss later on how to calculate gain or loss on these assets. But in all these cases, asset has transferred. So asset that just doesn't mean sale. There are other examples of disposals. Next term is date of disposal. Students, basically there are two types of contracts. One is called simple contract. In simple contract, simply we will transfer an asset. So in the simple contracts, there is no issue at all. The date when we will transfer the asset, that will be the date of disposal. If today I have gifted an asset, so the asset has transferred today. So today's date is basically date of disposal. So in simple contracts, date of contract will be date of disposal. Date of contract is basically disposal date. But on second level, there are few contingent contracts. Contingent contracts means there are conditions which are attached with these contracts. This contract will become legally binding only if the conditions of the contract are satisfied. So the date when conditions written in the contract will be satisfied, on that date, contract will become legally binding, and that date will be the date of contract or date of disposal. So in this case, disposal date will be when all the conditions are satisfied. When all the conditions meet. So when all the conditions are satisfied, when all the conditions meet in on that date, contract become legally binding, and that date will be date of disposal. We will calculate gain or loss as per that date. So this was basically second term related to disposal. Third term is death transfers. Means asset transferred after the death date of an individual. So normally you are already familiar with the concept of inheritance or transfer through will. So if an individual died, obviously property of that individual will be transferred after his death date as per his will. But please remember over here that CGT is basically a lifetime tax. Capital gain tax is a lifetime tax. No CGT is payable after the death date of an individual. Capital gain tax not applicable. CGT is typically a lifetime tax. CGT will be applicable only on those assets which are transferred during the life of an individual. Any asset transferred after the death date of an individual is not chargeable in the CGT. For example, Mr. A died and his house having market value. Mr. A died and his house having market value of £200,000 transferred to his son. So this is basically a small example. In this case, for Mr. A, no CGT implications because CGT will be applicable only on transfer of assets during the life because this asset was transferred after the death of Mr. A. So that's why no CGT is applicable. What are the tax implications for the son? So the son has received this asset at the time of death of the father. So for the son, cost will be probate value. And probate value means market value at death date of an individual. So the market value of the house as on death date of Mr. A is £200,000. So these £200,000 will be the market value at time of death, that is called probate value, and that probate value will become cost for the son. So cost of the son is £200,000. Whenever the son will dispose of this asset in the future, he will use £200,000 as a cost to calculate profit or loss. And there is a note over here. Same rule apply. Same rule apply if asset transfer to spouse on death. Normally there are different rules if an asset is transferred between husband and wife, but if asset is transferred between husband and wife on death of any other party, same rules will apply. If husband died and on his death he has transferred his asset to wife, so same rule will apply. For the wife, cost will be probate value, just like this example. So if in this example, instead of son, Mr. A will transfer the house to the wife, same rules will apply. Cost of the wife will be £200,000 as well. So this is basically a point of death transfers. Okay. Now let's discuss what are basically the special rules for transfer between spouse. Transfer or transaction between spouse. If husband and wife will transfer assets to each other, what are basically the rules? Whenever there will be a transfer between husband and wife, these transactions will be at no gain, no loss. No gain, no loss. Okay. So whenever there will be a transaction between husband and wife, there will be no gain, no loss. So means in these cases, disposal proceed will be cost. So it will be assumed that the asset was sold to the spouse at cost. If I have purchased an asset for £5,000, when I will transfer this asset to wife, so it will be assumed that I have sold the asset to wife at my cost, which is £5,000. So in this way, when selling prices will be equal to your cost, no gain, no loss will arise. And in these cases, actual selling price ignored. For example, husband sold shares to wife. Husband sold shares to wife for £10,000, which he purchased for £2,000. Husband sold shares of a company to his wife for £10,000, which he purchased for £2,000. So even though in this example, actual selling price is £10,000, but because it is a transaction between husband and wife, for the husband, disposal proceed will be equal to cost. So it means if the husband has sold the asset at cost, so no gain, no loss will arise. We don't need to prepare any calculations over here, but I can explain it to you. Disposal proceed will be equal to cost, which is £2,000. Cost is equal to cost, which is £2,000. So it means there is no gain, no loss for the husband, but for the wife, because husband has sold this asset to wife at cost, so cost of the husband will become cost of the wife, which is £2,000. So now the cost of the wife is £2,000. Whenever the wife will dispose of this asset in the future, for the calculation of profit and loss, wife will use £2,000 as the cost of this asset. So suppose in future, wife sold shares for £13,000. So in the future, the wife has sold these shares for £13,000. So disposal proceeds will be 13,000. Cost of the wife is 2,000. And now answer is 11,000. So profit is 11,000. Profit of the wife is 11,000. The wife will pay tax on 11,000 pounds. These are basically the tax implications if there are transactions between husband and wife. So transactions between husband and wife are recorded at no gain, no loss. Students, if you have any questions, you can ask. Yes.
So then what's the point in selling a 10,000 to wife when the cost remains the same for the husband 2,000?
That is basically the actual selling price of 10,000 pounds, but tax law has given the relief over here that you will not have to pay any tax. Simply, we will ignore that selling price of 10,000 pounds.
Okay, sir. So we will ignore this 10,000 in our calculation of CGT.
Yes, we will not use it. Simply, we will ignore it.
Okay, sir. Thank you.
No issue. Okay. Then the next point is disposal proceeds. Disposal proceeds means selling price. Students, in case of normal sales transactions, means sale at market value. If we have sold any asset at market value, in that case, disposal proceed will be simple selling price which we have received from disposal of the asset. If we have sold an asset at the market value, in that case, there is no issue at all. Selling a disposal proceeds will be the selling price which we have received from the customer. But second case is sale at undervalue or gift. Students, please remember, sale at undervalue is also an example of gift. For example, I have sold an asset having market value of 10,000 pounds to my younger brother for 4,000 pounds. Market value of an asset is 10,000 pounds, but I have sold it to someone, maybe my younger brother or friend or somebody. So in that case, market value is 10,000, but selling price is 4,000. So it means once again, there is gift element of 6,000 pounds over here. So that's why sale at undervalue or gift, both are treated as gifts and same tax implications will apply. So in these cases, students, disposal proceeds will be market value. Okay. So if we have sold an asset below the market value, or we have gifted an asset without receiving any consideration, in both cases, selling price will be market value. So suppose purchase price was 3,000. Okay, so purchase price of an asset was 3,000 pounds. We have sold it for 4,000 pounds when market value is 10,000 pounds. So how to deal with this type of example? Simply disposal proceed will be market value. which is 10,000. Cost of the asset is 3,000 pounds. And we will have to pay tax on 7,000 pounds. This is our capital gain. So we will take selling price of the asset, we will deduct cost, we will have capital gain, and we will pay tax on that capital gain. So this is basically the point of gift or sale below the market value. Friends, if you have any question, you can ask. Yes.
Sir, in the beginning of in the topic of UK and non-UK resident, when we were discussing the non-UK resident, you have told us that they have to pay tax only on their UK property. Sir, so is it necessary that that property should be residential or not?
Uh, we will cover these points later on in this chapter. It
So
is
far,
just
we were saying that only that's property.
we will cover these points later on in this chapter. For the time being, you can say it is residential property. Okay.
Okay, sir.
Okay. Third one, students, in case of theft, or destroy or damage. Okay. So in case of theft of asset, or if the asset was stolen or it was destroyed or it was damaged. So in these cases, there are special rules. There are special topics. There are special rules. So we will discuss later on in this chapter what are these special rules for the calculation of capital gains tax. Because in these cases, we will have to consider insurance proceeds. So for example, if the asset was damaged, we need to consider what is basically this insurance proceeds which we have received. So if we have received the insurance proceeds, rules are different. If we have not received any insurance proceeds, then rules will be different. So there are complete topics on asset damaged or destroyed. So we will cover these rules later on in this chapter. Students, we have started capital gains tax, and I have shared few terms that capital gain tax will arise. We will pay capital gain tax when a chargeable person makes a disposal of chargeable assets. Capital gain tax will be payable when a chargeable person makes a disposal of chargeable assets. So we have covered these three terms in bit detail. What is basically chargeable person? What are chargeable assets? And we have covered different points related to disposal. So what is basically the meaning of disposal? What is basically the meaning of disposal? Uh, what is the date of disposal, how to decide the selling price of the asset, what should be the selling price in case of transaction between spouse. So these are basically different points. We have covered these three terms in detail: chargeable person, disposal, and chargeable assets. Now we are moving towards our next term, which is chargeable gain. How to calculate gain or loss in case of capital gain tax. Chargeable gain or loss. Let's consider it with the help of an example: land and building. Suppose I have purchased land and building for 100,000 pounds. Purchase price of the land and building is 100,000 pounds. Extra costs. Extra costs are called incidental costs. For example, fee or commission paid to the property agent, any legal fee of legal documentation, maybe any advertising cost at the time of purchase of property, maybe any auctioneer fee, maybe any agency fee. So these are called extra costs at the time of the purchase. So these are called incidental costs. So at the time of the purchase of the property, incidental cost is suppose 10 per thousand. So total cost of the property is 110,000 pounds. Later on, after a few years, we have sold the property for 190,000 pounds. So there is a chance that there may be extra cost at the time of the sale. Maybe we will have to pay commission to property agent at the time of purchase as well as at the time of the sale. So maybe there will be few extra costs, few incidental costs at the time of sale of property. So suppose these are 20,000 pounds. So simply we will write down selling price of the asset. We will deduct incidental cost at the time of the purchase of the property, and we will also deduct incidental cost at the time of the sale of the property. We will also deduct purchase price of the property, and we will have gain or loss. So 60,000 pounds is basically the chargeable gain. So in this way, we will calculate gain or loss on every asset. For example, during the current tax year, please remember we will calculate CGT for the tax year and our examinable tax year is from 6th April 22 to 5th of April 2023. So during this current tax year, suppose we have sold asset number 1. Selling price was 60,000, cost was 20,000, and profit is 40,000. We have also sold another asset, asset 2. Selling price is 30,000, cost was 40,000. So we have gain of 10,000 pounds over here. Sorry, loss. So we have loss of 10,000 pounds over here. So we have net chargeable gain of 30,000 pounds. So net chargeable gain over here is 30,000 pounds. So in this way, we will calculate gain or loss on all of the assets. Then finally, we will net off their gains and losses to find out net chargeable gain, which is 30,000 pounds over here. Then we will deduct annual exempt amount over here. What is annual exempt amount? This is basically a fixed relaxation, fixed amount of relaxation that is available to every individual every tax year, and the amount is 12,300. Then we will deduct any brought forward capital loss over here. It will give us taxable gain. This is basically the gain which is taxable, which is chargeable. We will have to pay tax. We will have to pay tax on taxable gains of 17,700 pounds. Okay. So students, there is a mistake in the notes over here. This annual exempt amount should be over here. I will fix this issue when I will send the updated notes. These notes will be ready before your next class. So hopefully these notes will be shared before our next class. So in this way, we will calculate taxable gain and we will pay tax on this taxable gain. Students, if you have any issue, if you have any problem, you can ask. Student, incidental cost would be at the time of purchase or at the time of sale. So if any incidental cost is incurred at the time of purchase, it will be deductible, or incurred at the time of the sale, it will be deductible. Otherwise, it will not be deductible. Students, incidental cost is basically any extra cost incurred at the time of purchase or sale. For example, it could be cost of legal documentation incurred at the time of purchase or sale. Maybe commission paid to the property agent. So commission paid to the property agent is extra cost other than the purchase price. So commission paid to property agent will be included in the extra cost, incidental cost. So these are few examples of extra costs called incidental costs. Fee or commission, agent fee, legal fee, advertising fee, auctioneer fee, agency fee. So if you have incurred these costs at the time of purchase, so it will be added in your purchase price, if and ultimately deducted while calculation of gain or loss. In the same way, if you have incurred these costs at the time of sale, so once again these are deductible. Students, can you please calculate taxable gain for this example? Okay, so students, let's solve this one. Students, the detailed format is, first of all, we will write down name of the individual, Mr. A, capital gain tax computation for the tax year 2022-23 on asset 1. We will prepare calculation of gains or loss in the working. So I'm doing it over here, but we will do it in the workings. So 90 minus 30. On first asset, we have gain of 60,000 pounds. On asset 2, 45,000 is basically the selling price, 42,000 is the cost, and 7,000 is incidental cost. So 4,000 is basically the loss, if I'm not wrong. Then we will deduct annual exempt amount over here. Wait, what is the gain over here? 56,000. Now over here we will deduct annual exempt amount, which is 12,300. Can you please tell me the remaining gains over here? 43,700, if I'm not wrong. Over here we will deduct brought forward capital loss, which is 35,000 pounds. So taxable gains are 8,700. So let's practice another example. On asset 1, we have gain of 30,000 pounds. On asset 2, we have loss of 25,000 pounds. Requirement is taxable gains. So simply on asset 1, we have loss of 30,000 pounds. On asset 2, we have loss of 25,000 pounds. So we have net gains of 5,000 pounds. Over here, we will deduct annual exempt amount, which is 12,300. But please remember, this annual exempt amount can reduce our gain up to 0. It cannot convert our gain into loss. Now, because maximum gain is 5,000 pounds, so maximum annual exempt amount which is available over here is 5,000, and our taxable gain is 0. Okay, so if there are lesser gains or loss over here, in that case annual exempt amount will be wasted. Let's practice another one. On asset 1, we have gain of 20,000 pounds. On asset 2, we have loss of 30,000 pounds. So in this way, we have net loss of 10,000 pounds over here. So our annual exempt amount will be wasted. Because we have already lost, annual exempt amount can only reduce our capital gain. So in the previous example, there was capital gain of 5,000 pounds. So our annual exempt amount has reduced our gain up to 0, and remaining annual exempt amount will be wasted. But in the next example, over here we have loss of 10,000 pounds. So if we have already lost, then annual exempt amount will be wasted, because the role of the annual exempt amount is only to reduce our capital gain. Let's take another example. On asset 1, we have loss of 20,000 pounds. On asset 2, we have loss of say 19,000 pounds. So now we have gain of only 1,000. So annual exempt amount in total it is 12,300, but over here only 1,000 pounds will be used and remaining will be wasted. If we have brought forward capital loss over here as well. So if we have brought forward capital loss of 70,000 pounds, so these losses will not be utilized over here. We will move these losses to next tax year, which is 23-24. Because there are no remaining gains over here, our gains are reduced to zero. Our brought forward capital losses are 70,000 pounds, which we are unable to adjust over here. So these losses will be simply carry forward as it is, and these losses will be adjusted in the next tax year. Please remember, any capital losses can be carry forward for indefinite number of years. So that's why if our losses are not utilized over here, simply we have moved them to next year. Okay, if you don't have any questions, then that's all for today. See you in next live session. Thank you, everyone.